Absolutely. Well, just a classic, isn't it, that it is partly down to the British summer weather. But it is true. The ONS today have outlined that there are, in particular, two factors that have caused today's data. One is the particularly wet weather in July, and that, as we know, has likely impacted construction, but also possibly retail sales, which are down about 1.2%. But we also know that there was industrial action, and that's had a drag on healthcare output as well. So we view these as sort of one-off issues that are in the context of an overall picture where we're putting in place policies to ensure that we can grow our economy. And I'll remind your viewers that the economy grew in Q2 by 0.2%, which was on the upside of market expectations. So we're certainly not complacent, but it's important to put this in context today.
Our viewers may not be too disappointed with the numbers. I mean, they can see bad news as good news, and you can already witness the reaction in cable at this point to move it lower on expectations. Well, maybe this makes a difference when it comes to the Bank of England, that it won't be lifting rates if we're seeing that services component cooling off. Difficult narrative for a government, though, trying to sell this to the broader public, that growth could be slowing. How do you think about the resilience of the economy from here, and how you sell this to the public that, look, we need to cool down to avoid more rate hikes? Yeah,
well, I think the figures, like I said, at the end of Q2 and the 3 months to July, growth was on the upside. It shows the resilience in our economy, and yesterday the labour market data showed that too, right? But we are certainly not complacent. In terms of the Bank of England, we've got to support the independent Bank of England in taming inflation and ensure that fiscal policy aligns to monetary policy, because ultimately the biggest enemy for all of us is inflation. We've got to get that down. We've got to support the Bank of England to get inflation down to their 2% target. I think we'll help achieve that, but it's not going to be an easy road.
Does that mean cutting in spending, and how much, you probably can't divulge too much in that regard, but would that really be looking at a big cut in your spending, or changing where you spend in order to ensure that this alleviation of that inflationary pressure gets bigger as well across your portfolio?
I think, look, in the Treasury, we've got to make some very difficult decisions to ensure that we get inflation under control. And I would argue we're making those difficult decisions, whether that's on public sector pay and on taxes, for example, where people are calling for tax cuts. Obviously, we want to get taxes down, but we've got to make responsible, tough decisions to keep inflation on a downward trajectory. We've also implemented, by the way, policies which have helped to alleviate inflation, whether that's freezing fuel duty or the energy price guarantee, which the OBR said will cut about 2% off inflation. So ultimately, we've got to make sure that Treasury policy, fiscal policy, is always aligned with what the Bank of England are doing in terms of monetary policy.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.